those index options are oftentimes much better in today's current environment than what we've seen in the past. I've seen it firsthand myself. I know you have as well, Jeremiah. So when we really break those down, it's just optimization. Can we optimize what you've already got and improve it at no additional cost? And oftentimes we've found that. The participation rates go hand in hand with the index selection, and that oftentimes a higher participation rate joins that. One feature we've talked about, we just wrapped up on, was that long-term care benefit. We see that in over 50% of these income annuities today. And also, we want to compare that carrier rating. We've got more information that we can dive into today than what we had 10 years ago in finding out if that carrier is the right fit for our client.
Yeah, those are all good points. And the other one that may have been left off there was the premium bonus to help offset those surrender penalties that may be assessed on an early surrender. And then another thing that we haven't really delved into too much here, but we've touched on a couple times is like, how is this opportunity and why is this opportunity available? And it's simply because annuity products are correlated to the interest rate environment that we're in. So today in 2025, we're in a peak cycle of the interest rate environment where many people are thinking we're at the top and that those interest rates may start to come down. But just a handful of years ago, we were in a historically low interest rate environment. So that's why those income rates were lower. That's why those fixed rate annuities were lower. That's why those growth indexed annuities were the participations and the caps were lower. It's because of that interest rate environment that you were in back then when you purchased it. So now, being in a higher interest rate environment, we have better product offers, and that's why this opportunity exists. And I will tell you, um, with the interest rate environment potentially being on the decline here in the near future, none of us really know for sure, but at some point they are going to start coming down. But there's never been a better time to consider upgrading or replacing an older annuity, simply because we're at the peak of an interest rate environment with the likelihood that that's going to go down. So the rates that you're seeing on today's annuity marketplace are the highest they're going to be in probably a few years. So if you're on the fence and maybe just thinking about this, the best thing to do would just to be obviously just do some comparisons, see what the benefits are, see if it makes sense to upgrade, and you might find that it is. And if it is, now's the time to pull the trigger. Definitely you should take your time to the point where you're comfortable, but just know that interest rates may be on the decline. So if that happens, the rates you see today will no longer be available. But definitely do not rush this type of decision.
Yeah, great point where we're treading lightly here and talking about this topic because it is a little sensitive in making a move like this. And part of what we're trying to really instill is that by working with the right agent who can bring all this information to you up front, hopefully it's us, maybe not, then at least you've got the knowledge and expertise to know, hey, at least I did my research. I found out if exchanging my existing policy is the right thing for me today. And then you can rest that much easier knowing that you've done your homework and you've done your research on your own.
Exactly right. And what we have found is not every annuity should be replaced, but there is a significant chance that a majority of older annuities could benefit from an upgrade, and consumers or owners of those older policies in particular could benefit. And that's where you really want to make sure that you're comparing all of these factors into um, a good sound decision making process. So some of the things that again want to account for before you make the leap are the surrender charges. What's the impact of changing and replacing an older annuity, and are there opportunities to get into a newer product that will help you offset those surrender charges? Other things to consider, right, Zach, would be the loss of income guarantees. So sometimes you may be in a situation where the income you're getting, while albeit not be the highest potentially income you could have today, but you may not have enough account value left to transfer into the new annuity to give you more income. There would be a disadvantage to sacrificing an income that is more than you could get if you moved, even though there might be other benefits that are different in the new policy. If your primary objective was income, we want to make sure that you can at least get an upgrade on your income. That would need to be a qualifier in order to make sense of it. What are some other things that someone would want to consider there, Zach?
Yeah, again, we've talked about the replacement of the income. If we're looking at different annuity types, maybe a fixed index annuity for the purpose of accumulation, we want to find out what, if anything, somebody might be lacking in that existing policy. Again, we've talked about certain features, whether that's maybe a care feature or maybe even a waiver. Maybe there's a waiver in there where you can access funds should you have a life event come up where you're confined to a nursing home or a care facility. Maybe that waiver is not built into your existing policy. Maybe there's a solution out there that will allow you that access if that's important to you. These are some of the intangibles that don't come to the forefront of why a replacement would be necessary, but oftentimes are a big value add.